Here on the home front, federal workers and members of the U.S. military aren't the only ones struggling during the government shutdown. High interest rates and the high cost of living are taking a toll on married couples. Recent research by InvestorsObserver found that the typical married couple cannot afford to raise 3 children in 39 major American metro areas. Here to explain is InvestorsObserver financial analyst Sam Bourgi. Sam, what is happening? Which cities are the worst ones for a family of 5?
Well, it's a bit counterintuitive because you would think that a lot of these cities would be some of the more expensive parts of the country, like San Francisco, LA, et cetera. But what we're finding is when we did the study, we compared average incomes across the country. And when you compare average incomes to living expenses, you find that the cities with the biggest affordability gap, or the cities in which people can't afford their children to raise their children based on all the needs that they require, are Philadelphia, Detroit, Cleveland, and down in McAllen, Texas. So again, it's a bit counterintuitive, but incomes in those parts of the country are a lot lower, whereas child rearing costs are elevated. And when you combine the two, you see that those are the areas that have the most affordability challenges. But as you mentioned at the outset, this is a pervasive issue across the country. In 39 of the 50 top metros, we have these affordability issues. People can't seem to have the ends to raise children properly based on all of the transportation, housing, and leisure activities that children require in order to be successful.
Well, that's one reason I think Zohran Mamdani is popular in New York, is because one thing he's talking about is childcare and the cost of childcare.
Right.
I'm sure that's a big issue, but we hear a lot about high interest rates. Is there any indication that the Fed will finally lower them when it meets next week?
Yes, there's all indication now that the Fed will cut rates next week, and then again probably in December. So we're anticipating 2 more cuts this year, following the September cut. If you take a look at some of the derivatives markets, actually some of these traders, these Wall Street bigwigs, they're expecting even one 50 basis point cut sometime this year, either in October or December. That doesn't seem to be the consensus view yet, and I don't want to say that's a guarantee, but that just means that people on Wall Street now, the investors, are also expecting for there to be more aggressive rate cuts now as the Fed has to shift its focus from inflation to the employment picture, which has deteriorated over the past year.
Well, that'll definitely be better news for the economy for 2026. So what about now, the tariffs? What impact are they having on these couples that you talk about and all Americans? Are prices increasing on many imported goods?
Well, this is a very interesting point because so far it seems like a lot of the producers themselves, the wholesalers, they've actually absorbed most of the impact so far. We had some research from Goldman Sachs that showed that I think about 2/3 of the import costs or the tariff hikes have been absorbed by companies, but that's beginning to change as of October. Moving forward, we are expecting tariffs to trickle into consumer prices, and it's going to do so probably over the next year or two. I mean, we could see the impact well into 2027 based on some of the research. So if you take a look at the pass-through rates, it's eventually going to trickle down to the consumer. And that looks like it could start to be happening now in the fourth quarter, heading into next year, as a lot of these companies say we can't shoulder anymore. We have to start passing on these higher costs to consumers. That's what we're expecting next. That's the next domino to fall.
Well, we get a lot of our goods from China, and Trump meets with President Xi next week. There's been a dispute over rare earth metals, and Trump has proposed increasing tariffs on China from the truce level, the current level of 30%, by another 100%. And even the U.S. president says that's unsustainable. So what do you expect is going to happen when the two presidents meet and discuss this in South Korea?
I expect by now I've seen Trump's approach to tariffs and trade quite a bit. I think this is a negotiating tactic. Ultimately, I do think Trump wants to make a deal. We know China also wants to make a deal. There's a lot of posturing going on right now. As the president said, it's really unsustainable to keep tariffs at this level. This is basically a bargaining chip to ensure that more productive capacity comes back to America eventually. When that's going to happen, that's subject to a lot of debate. I know a lot of these big tech companies right now are promising hundreds of billions of dollars in investment, especially into AI and data centers, bringing more of that production back home. but I think Trump's trying to reorient the economy back towards the domestic production, and that's going to require a lot of short-term pain in the wake of tariffs, and also when it comes to a lot of this tariff rhetoric. But I do expect positive developments to come out next week when they meet, at least maybe an extension of the tariff truce beyond November 1st. That I think might be a good stopgap as they continue to negotiate something more fruitful.
And finally, Sam, the government shutdown, it's costing the economy as much as $2 billion per day. And Democrats want to restore another trillion and a half in budget spending for ACA subsidies, Medicaid. Meanwhile, the U.S. national debt is close to $38 trillion, and that is unsustainable. So what needs to be done?
Well, that's the big question. I don't personally think there's really any political resolve on either side of the spectrum to really tackle this issue. If you take a look at a debt level that big, there's really not a lot of ways in which you can address that. A lot of the medicine that we're going to need is going to be something that politicians especially, are not going to want to take. They're not going to want to, give us the policies that are going to lead to a lower deficit. So I think we have been seeing tariff revenue increase. That's a positive. But again, as you mentioned, spending continues to surge through the roof. In the immediate term, the really big impact of the government shutdown is there's a lack of data coming out. So we really don't know how to gauge the performance of the economy. We don't have the CPI figures. We didn't get the non-farm payrolls numbers. That's kind of been keeping everybody on ice. There's a bit of a data blackout right now. It's been a lot harder for us to evaluate the health of the economy as this drags on. But, this is becoming a lot more common, these shutdowns over the last decade or so. So I think we're not even, I think, halfway through the longest one that we saw. So there could be a little bit of time longer before this thing gets resolved.
Okay, Sam Bourgi, Investors Observer. Thank you, Sam, for joining us. We appreciate you.
My pleasure.